Steve's data sort of mixes in with what we got out of bull-bear ratios last night, right?
Yes, that's correct. That's a little bit of anxiety and concern. I think, as you aptly led into it, the volatility, I think, is probably hurt. The challenge that we're facing today is to meet and surpass yesterday's highs. So until you get to that, the market is kind of a yawn, and that's 24,830 in the Dow and 2685 in the S&P, and we haven't come close so far today.
You think the way to characterize this market right now is not really a buy the dip market, but a sell the rally, given what we've seen even today? We're off highs for the Dow already.
Well, we've certainly have seen a pattern that you see strength earlier in the day, and it seems to fade as you get toward the close. Not consistently, but if you're looking for patterns, that's as close as you come to one. So, yeah, no, I think it's there, but the volatility has been extraordinarily sharp. You're seeing some signs that can accompany kind of an extended bottom, but I think I want to see the volatility calm down a little bit before we take any big jumps here. Again, it's pretty simple stuff, folks. You look at yesterday's high, they've got to get to that and get higher. Otherwise, you have a pattern of lower highs, and that doesn't help you out when you're trying to invest.
How much geopolitical impact are you seeing? We had the confidence vote in the UK, signs of potential turbulence with Turkey on the horizon as well. It seemed to kind of rear its head a couple of days ago as we were looking at questions over what would happen with Brexit. Do you expect that to continue up to the end of the year?
Yeah, no, I think it will. However, I think people are trying to dig in here. We're about to have a change of leadership in Congress. They want to see, will there be any initiatives beforehand? Do the Democrats want to try and wait and see? Will the Republicans do any lame duck work and see where we go from there? So for now, yes, the geopolitical is of interest, but slightly in the backdrop because they're looking more domestically. That's where the game's going to be played.
Speaking of domestic, what do traders say right now about a shutdown? Do they care? And then the Cohen sentencing and the president's reaction today. How do those matter at all?
They matter to some minor degree. I don't think greatly. But it was interesting to watch. The Cohen sentencing didn't have as much of an effect as the agreement of the National Enquirer to provide data. And I think, I don't want to overanalyze this, but I think that's because Cohen is a lawyer, and Trump could basically say, well, I didn't tell him to do anything wrong. He's a lawyer. He should know right from wrong.
As he has said.
But on the other hand, that you can't make that same claim with a newspaper and what's going on there. So that's why I think you may have had a more notable reaction to that than the others. But we'll continue sorting and parsing through this. Hopefully we'll get Santa Claus out here. Right now we got his picture on a milk carton.
Yes.
See if we can get him back in the game.
I got to get your take on Draghi today. QE is part now of the toolbox. It's permanent. It's something that may be considered usable in contingencies going forward. I mean, here we are, right?
And here we are is dead right. And I think you're hearing not only is our Fed backing up, he's backing up. I think it's a global situation. I think people realize that this quote-unquote return to normalcy may be a very delayed process because we don't know if the economies globally are strong enough to take a return to normalcy.